I'm Scott Redler, Chief Strategic Officer with T3Live.com.
And I'm Alex Steele with The Street, and together we bring you Morning Call Express. Scott, it's Monday. I'm reading the journal on my iPhone. What do I see? I see an article that you're quoted in saying the S&P has seen the bottom for the year. You took a lot of heat for that last week. Do you still stand by that?
Yes, and I said a 75% chance because you never really know with everything going on in the world, but I said it was a good chance that you have to switch gears, go from just short on the brain to actually holding some positions. Now, we've been talking about staying in macro tier 1 if you have a long-term time horizon. Now with this new composure change, maybe you get to tier 2 in some of the best acting stocks. Now, the reason why I said the low was in or could have the low is I wasn't just throwing things out there trying to make a name. I saw a very reliable reversal bar last Tuesday, the day that I said we have to take notice. I call it a lot of things: red dog reversal, outside day to take notice, because it's important, because sometimes it leads to such a big move or a complexion change. So if you look here at that Tuesday, this is what I saw in the charts. So on the S&P, you take a look right over here, you will see that.
We're going to get to the chart. We're going to get to the chart.
All right, no chart. Anyway, that reversal was right around 1100. That was when we broke below the lower end of the range. There's the chart. We broke below the lower end of the range, and we could have really went down to 1020, 1040. We went to 1070, which was an area we talked about covering shorts, and then we had a pretty sharp move off of that low. We closed on the highs. You take a closer look after that reversal bar, after this day to take notice, after about 100 handles to the downside, you had some nice movement thereafter. You had 3 up days in a row, and within that 3 up days, obviously on jobs day, they sold the strength, which was a little bit of a way out for some trapped bears. And I spoke to a lot of them, the ones that wrote in and said, how could you say that? I was just saying, listen, just don't short every move. Look for a way out. It's not going to be huge. We opened up at what was it, 1172, went down to 1150. That was their way out. Hopefully people kind of reshuffled so you could be in some longs, even if the headlines aren't so pretty.
All right, so then you're going to be looking to add to the tier 1 position, so you're going to get more heavily invested, but it's not going to be a straight arrow up, right? We can expect a lot of volatility, so how should an investor kind of brace for that?
Just keep watching your positions, watch the levels. After 4 up days in a row, when everyone gets excited, doesn't mean you add there. Try and buy on the dips. Don't chase excitement. It just means that you might have a little bit more of a glass half full versus half empty.
We do have a lot of macro headwinds to sort of contend with in the short term.
Well, think about the headlines. Everyone's saying we're up on optimism that the leaders in France and Germany are going to come up with a plan, which they've been talking about for a long time already, in 3 weeks from now. So that means the market has a basic 3-week window to trade however it wants and make as many people feel as confused as always. But anyway, there's been a nice move off the lows. I'd like to see commitment. We want to hold higher. We don't want to just see it fall apart. We saw that Friday. Buyers came in, and now we're gapping up. Now the question is, can we trade above this downtrend and hold it and close above it and then test the upper area of the range? So one more time on this chart real quickly, you will see that this downtrend that we've had in place ever since early or late this summer is going to come into, it's going to get tested. So you have the 50-day, which we haven't taken back in a while. Okay, look at the last time we were above the 50 was all the way back in late July. So if we can close above 1177, I think shorts are going to get squeezed again. And then we have an easy test of the upper end of this range around 1230. And then we could even test that broken neckline in the head and shoulders pattern.
All right, then in terms of kind of where to go, where to look to, we saw materials, energy, industrials doing really, really well last week, that cyclical story. What's the one place you want to be looking at for possible, way to put your money?
All 3 of those showed finally some follow-through. They had a reversal and then 3 up days. Hasn't happened in a while. I think you could be light in those names, but seriously, the Qs are still holding higher, and retail also showed relative strength. So Qs and retail are the places to be, but I do think some of the other sectors will play along, but it has to be very stock specific.
Are still showing signs of life there. Okay, then let's get to one sector that's kind of 50-50 here. It's going to be the financials. It was held up about 4% last week, but was the worst performing sector on Friday. Nothing's really changed in the big macro picture here. So how would you be trading the financial sector?
Well, the financials are a sector to be light. That if you think you could handle being in some of the names, they're going to give you some moves to the upside, but none of them have broken their downtrends. None of them have had follow through. And on Friday, they gave back all of Thursday, which I didn't like. So let's take a quick look at the XLF. We'll see what needs to be done in order to really get this group moving. I didn't like the fact that Friday engulfed Thursday's action, but we're still well above this recent area that we came, like this 1150. This was that reversal Tuesday. I'd like to see you stay maybe very, very lightly invested, but this move to the upside in the indices can start to get frisky if the XLF were to break above this 1235 and actually hold above it and take back that 50-day moving average. So right now, if you wanted to be in maybe JP Morgan small, or we talked about getting into a little Morgan Stanley last week, just be very small for now because the banks have a lot to prove. There are a lot of easier areas to be invested in.
And then real quick, we want to round it out with gold here, moving higher along with stocks, continuing that bizarre relationship here where basically traders don't need to force liquidation in gold, so then gold goes higher when the stocks go higher. So if we do see the stock market really rally here, gold could also take off as well. It's really encroaching on that 1700 level.
Yeah, I see an open gap in there. We've been talking about this lower pivot. If you look today, you will see the GLDs are opening above it. I guess someone was drawing here before I left, but it makes sense. A close above this 160, 160, you could get a move back to 170 and fill this gap, and then there'll be major resistance around 170, which is 1700 and change.
All right, so if you want to get all of Scott's stock picks as well as our entire take on the markets, check out the Morning Call on the Street.